Guys, we're back at it. I just did a 8 game back-to-back tournament today. My body is in shambles. My feet is definitely feeling it. Millennials, we're definitely getting old. We're approaching 30s. It's crazy out here. And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Welcome to this week, where we bring you current news on everything finance, business, and the markets and investment funds. This week, across parts of North America, from Mexico to Canada and crossing the contiguous United States, people gathered around with special glasses looking up in the sky to witness a solar eclipse. A solar eclipse happens when the moon passes between the sun and the earth. Sometimes the moon only blocks part of the sunlight. This is called a partial solar eclipse. Other times the moon blocks the full sunlight. This is called a total solar eclipse. That's the one that we had this week, okay? The one that we had this week was a total. So the sun was like completely blocked. So in parts of the world, it was completely dark during daylight, which is pretty cool. Also, this week, BlackRock asset hits a record $10.5 trillion. The world's largest asset manager reported on Friday a record asset under management of about $10.5 trillion in the first quarter and posted a 36% jump in profit. I can't even fathom doing those numbers because, woo! With this followed an increase in investment advisory and administration fees, which climbed nearly 8.8% to $3.63 billion. That's their fees off rip. That's crazy. BlackRock provides investment management and technology services to retail and institutional clients globally, including sovereign wealth funds, insurance companies, and large corporations. So they're the big guns. Woo! Big numbers, big numbers. Welcome to Trade of the Day, a weekly series coming to you every Saturday on I'm the Trader. We love to know where in the world you guys are tuning in from today. So post in the comments where you're watching or listening from. My name is Alice, and I help traders and investors who struggle to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everybody on this planet needs to have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Woo! Ha! Coming up this week, this is how you could have made 5% in the market, taking one trade a week, using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward. We had a total number of just one trade this week for potential of 6%, and our weekly goal is 5% anyway. So we did hit our weekly goal this week. A reminder, this is not financial advice, and that trading comes with real risk, guys. You will lose money, period. But before we dive deep into the trade of the day this week, let's talk about having a trading edge and what that entails. A trading edge is one of the three pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from three things. One, understanding the market and how it operates. Two, having one trading model that has IPTA signatures. And three, having a plan and process that you follow every day. Successful trading, guys, is boring trading. There's no excitement. That's how you know you're doing good. This is the 3-step process I use to take trades weekly. Step 1, we have condition. This is based on a higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, the stage. Because once you understand where the market is going and you understand the setup, the entry is easy. If you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. All right, so we have step one, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This week, we were expecting the weekly candle to expand higher. That doesn't mean it has to close higher. As you can see, institutional order flow is bullish. Down close candles are supporting price higher. Price is finding it easy to break highs and is not spending long below lows. Fake value gap BISIs are supporting price higher as well. Okay, we've been bullish on NQ for a while now, and we're sticking with that trend. Then we have step two, the stage. What sets up your trade and what does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stalk setups on calendar day and after news release. The optimal days and times to trade this week were Wednesday after PM session, Thursday morning session and PM session, and Friday all sessions, okay? Secondly, we look at what sets up the trade and what does it look like. This would be your model. Since we were expecting the weekly candle to predominantly expand higher, we went into the market hunting long formations. For our buy model, we want to see liquidity taken below a key low or the liquidity probed. Displacement higher causes a market structure shift above the key low. We wait for a short-term low to form in the market structure below 0.25. We set our entry limit order at the short-term low, stop loss below the swing low, and we're targeting a 1 to 3 always. It sounds complicated, guys, if you're hearing it for the first time, but it's really simple. You just have to keep showing up on the charts and looking for it every week, okay? Now, let's get into it in price action this week. Thursday, April 11, trade of the day, breakdown. All right, so as you can see, Thursday we had 8:30 news coming in, red folder news, and then one we had red folder news as well. We're waiting for the news to release, and then we're anticipating to get into the market. So we're waiting for the news to come out, and then we're looking for a setup. So as you can see, 8:30 when the news was coming out, CPI or PPI or core PPI. We had liquidity taking a kilo, step one. Price trades below kilo, liquidity is taken below kilo. Then we have step two, where displacement higher causes a market structure shift above the kilo. We had multiple structure taken actually. And impulse swing has a fair value gap, busy near the swing low. Check mark, boom. Step three, we wait for a short-term low to form in a market structure below 0.25. One thing that is always important to remember in trading is that it's time and then price. The emphasis on time. Well, everything is on a clock here. Okay, it's time. So we're waiting for 9:30, which kicks off the AM session, New York AM session, and we're looking to get in after the news. Okay, after I'm usually looking to get in not in the first 30 minutes, but if a setup is forming after 9:50, I'm getting in there. So I'm usually waiting for 10 o'clock to get in the market. So 10 o'clock comes, I'm waiting for a short-term low to form in the market structure. We had a short-term low form in the market structure below 0.25. Set a limit order right there. Stop loss below the swing low. Sorry, guys. Since this is a long wick, sometimes I personally will use the 50% of the long wick as my stop loss. So stop loss will go right here. We're targeting a 1 to 3. So we were in this trade at 10:15, go out or broke even at 104, and we got at the trade at 2:30 for a total time in the trade of 4 hours and 15 minutes in this trade. Okay, so this trade right here would have got you your 5% for the week, and we're done trading. So we're not even looking for Friday's price action. We didn't even get any setups Friday anyway, but that would have been it. This week, we showed you one opportunity that could have netted you 5% for the week with 2% risk if you had taken This week's trade, you're looking at 6% for the week, which is not bad. Just think about those numbers in the beginning, okay? Just think about the numbers in the beginning. But remember, we're always just looking for 5% and we're done. So Thursday we would have been done trading, and then that's it. This week we were anticipating the weekly candle to expand higher, and even though the week ended up closing bearish, so also it was a down close, we were able to go in and hunt down our buy formation that netted us our 5% for the week. If you found value in this information, make sure to subscribe and turn on post notifications if you haven't already. This skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for tuning in and watching Trade of the Day. See you all next time, same place, same time. Happy hunting.